I'll start with you, Bob. You and I were discussing what we're seeing with oil. You're not surprised to see that Russia didn't necessarily come through. What's going on with this big sell-off?
Well, the Russian thing is a bit of a surprise. However, they had been constrained by contamination in pipeline earlier in the year. They feel to a certain degree, possibly justifiably, that they can overproduce a little bit here right now because they were not able to do so earlier in the year. They were not able to maximize their allocated production number earlier in the year because of the contamination in the pipeline. So there was that. Some of the demand situation here is also very negative. You have China GDP on Friday was very negative. South Korea reported the 11th week of fall in exports. I'm sorry, the 11th month of a fall in exports. Japan, 10 months in a row of fall in exports. These are export-backed economies. So when they're doing bad, it's not good for demand. Supply side of the picture, you had a big build in the EIA weekly storage report last week of 10 million barrels. So I'm looking for a build of 4 million this week. And there's a lot of crude oil in the system here. And considering the shipping situation we had lately, our export number is probably going to slide. We could have another big number, bigger than expected this week.
Matthew, what do you make of all the latest stats that we're hearing, all these headlines that are coming through?
Sure. Well, it's difficult to argue with what Bob was saying there. On the demand side of the picture, things are looking pretty soft, particularly from emerging markets there. And then on the other side of things, the supply growth side of the picture continues to look strong. We've got new production growth coming through from the likes of Norway, from Brazil. The US consistently is putting more oil onto the market. On a year-over-year basis, we're up over 1 million barrels a day there. That said, one of the more bullish things I think that we've got coming forward in the next month or so is really the prospect of IMO 2020 and that need for more middle distillates. And so even though we have been seeing those large builds, as Bob mentioned there, that big build last week, I think that we may start seeing draws going forward just because we're going to see these refineries starting to come back to market here and trying to produce as much as possible. So we are having a lull at the moment, but I think we're going to see some draws going forward here.
All right. Well, I want to ask you also about nat gas. I know you had a thought on that, Matt. But first, Bob, you and I were discussing some of the stocks and what a disconnect we're seeing from the commodity itself to the equities. So for today, for example, Exxon and Chevron are among the winners in the Dow Jones Industrial Average. People look to energy for an investment for some of these stocks. What's going on there?
Well, I think it's basically a case of bottom picking here. The S&P 500 energy sector was the #1 worst performing financial instrument on all of Wall Street last week. It was weaker than both crude oil, gasoline, and also throw in the diesel contract also. So there's usually a correlation there. It's very rare that you see the XLE basically trade lower than the corresponding commodities, but it did last week. It's very rare that you see it at the bottom of the pile of everything, and it was last week. So people see that, and they're like, okay, listen, they're going to get a good rally today in the equity space. What's the most beaten down sector? And they will jump into that space and pseudo-pick the bottom. It's obviously a dangerous game to be playing, especially when the commodity is pretty deep in the red on today. And it's kind of, you never know on any given day whether the XLE is going to correlate to the equities or to the commodity. It can go either way. I'm always pointing out to folks when it deviates away from the commodity, but sometimes it does happen.
And we got the Halliburton numbers. I just saw that it was a great performer today, right? It's up about 6%. But Matthew, you noticed an interesting stat after 106 weeks. Tell me what that was pertaining to nat gas.
Yeah, sure. So what we've seen with natural gas storage, we've seen it rising above its 5-year average. And that's the first time, as you mentioned there, we've seen that for 106 consecutive weeks. And this is so important for the natural gas price because there is this love-hate relationship there between storage and prices. So when prices are very high, storage is very low. And when storage is high, prices are low. So as we see storage ticking above this 5-year average, that's going to help prices keep in check going forward here as we're going into winter, as well as the prospect of us having a fairly mild winter as well. So this bodes well for low natural gas price.
Yeah, it depends where we're looking. Mild winter, right? But certainly as it gets colder, you do have demand on the rise. What are some of our projections? Which way do you think we're heading, Bob?
I think he's right that we will go down and test the 202 recent wave low in natural gas. That's a big event when, as Matt pointed out, we did trade above the 5-year for the first time in quite some time. It's a big development for natural gas. Earlier, a couple of weeks ago, there were natural gas specs were trying to pick the market here. We had a big rally in natural gas last year, and they were kind of hoping it would happen again this year. Did not pan out. Storage is going above the 5-year since then. And it's a pretty grim scenario right now, in my opinion, for natural gas. That 202, I'd be surprised if it was not tested. He is correct also. IMO 2020 is going to be a big event moving forward from here. Doesn't really play out yet in the cracks. That's the relationship between crude oil and heating oil. But I suspect that we'll gather some momentum and that crack will trade towards $30. Crude oil, though, I'm not a big believer in the upside there. The spreads are in contango this morning. The contango's starting to spread. In other words, the front of the curve is cheaper than the second month, and the second month is cheaper than the third month. That's a very negative price structure, and that is a double blinker, buyer beware for all things energy.
Matt, I only have 10 seconds left. Do you think oil moves more towards the 60 or goes below the 50 or stays there?
I think we're going to hold below 60 for now, but towards the end of the year, we could see it pushing above that. But before that, not really, probably.